wake up one day and it's a worst case scenario, the banks are shutting down, the dollar has collapsed. I'm not trying to be an alarmist here, but think through your daily life and think, okay, if X happens, how do I deal with that?
Hello guys, and welcome to another video of Crypto Money Talk.
Yeah, so I mean, for me, the way I'm trying to prepare is, I mean, I'm a trader and I understand that not everyone has that luxury to have that time to study to be a trader, but also it's hard and it's not meant for everyone, and it takes years and years of work. So you can't just be like, well, I'm going to become a trader today and I'll be okay. So I mean, keep that in mind. But I also think diversification amongst assets is important. What I love telling people is that I put about 10% of my net worth in gold and silver. And the reason I do that is not because, it's more as an insurance policy. If I wake up one day and it's a worst case scenario, the banks are shutting down, the dollar has collapsed, at least I know I have that gold. And I'm talking physical gold here too, not just stuff that's GLD, which, if things get shut down and you can't trade out of it, you're screwed anyways. So I think it's being prepared about that. I think, and again, I'm not trying to be an alarmist here, but think through your daily life and think, okay, if X happens, how do I deal with that? What do I need here at my house? What do I need? Those type of things I think are important. Eventually, Bitcoin enters my purview as being a safety play, but not until it gets a little bit lower. But again, keep in mind, it's not going all in on Bitcoin. It's allocation, proper allocation, which keeps you diversified. And think about this, is you might have a bunch of money in the bank, but if the dollar collapses, that's worthless. But if you diversified 10% in gold and maybe some in Bitcoin, you might still be made whole even with that collapse in the dollar. And I think that's the key, is thinking out all the possibilities and trying to plug those holes. And again, there's possibilities I'm probably not even thinking of, but I do recommend people kind of take a look at their lives and think about that.
If you have been following our channel, you may know that this advice of Gareth was the same as Robert Kiyosaki against keeping money in fiat currency or banks, and that holding gold, silver, and Bitcoin can help you survive if a crash occurs as predicted. So let's go into the market news before asking him more questions about the financial market's future and how he sees Bitcoin's development over the long term. Therefore, according to research, Bitcoin's long-term profitability has fallen to levels last seen in December 2018's previous bear market. BTC owners are selling their tokens at an average loss of 42%, according to statistics provided by the cryptocurrency analytics company Glassnode. According to Glassnode data, long-term holders of the most popular cryptocurrency are selling their tokens at a cost basis of $32,000, which means that the average purchase price for these holders is above $30,000. Several macroeconomic reasons might be blamed for the current market downturn and diminishing profitability. The stock market, particularly tech equities, which are currently experiencing an even more severe decline than crypto, continues to have a strong association with the BTC market. The suffering of BTC investors has increased as a result of rising inflation and the central bank's failure to control it. Traders and long-term investors are turning to short-term profitable and less hazardous products as they have considerably less money to invest. This was also demonstrated by the sell-offs of BTC miners. Historically, BTC miners have been long-term investors hoping to make a larger profit. But as mining becomes more complex and energy costs rise, these miners' profit margins have shrunk, compelling them to accept short-term gains. Furthermore, since prices were rejected from the recent high of $24.5 thousand, the balance of Bitcoin miners has experienced significant withdrawals, indicating that overall miner profitability is still somewhat stressed. The miner outflow has fluctuated between 3,000 and 8,000 BTC, but according to market statistics, a price drop to $18,000 may result in a monthly outflow of 8,000 BTC. What we actually mean to say here is that the long-term holder profitability added with miner profitability has reached a multi-year low. However, the levels are quite similar to when the crypto market bottomed out during previous cycles. On the other side, according to statistics and charts released on September 29th by cryptocurrency market intelligence platform Messari, investors in the United Kingdom and the European Union are dumping record amounts of pounds and euros to buy Bitcoin. The data that extends through September 27th shows that during the week of September 22nd to 27th, the daily volume of Bitcoin acquired in EUR surpassed 50,000, and the same number is reported for BTC purchases made in pound sterling. Nevertheless, investors are also exchanging their Euro and GBP money for Ethereum, albeit on a smaller scale than Bitcoin, according to a crypto analyst portal. Additionally, on September 26, the volume of trade between Bitcoin and the British pound on exchanges reached a record high of $881 million, exceeding the previous record of about $70 million daily, according to Finbold. The firm has previously utilized digital asset technologies. The company teamed up with the Polygon blockchain earlier this year to create Web 3.0 solutions and make it easier for businesses to issue non-fungible tokens or NFTs by establishing their very own NFT marketplace. MetaMask has been originally connected with the NFT market. In addition to all of this talking about the rate hikes, they may be good for the crypto markets as major currencies are devalued against the dollar. Let us explain how. On September 29th, investor and founder Vinny Lingham published a series of tweets outlining a possible near future in which people who are experiencing a devaluation of their native currency will use Bitcoin as a store of value. After the Chancellor's mini-budget, the British pound recently hit its lowest point versus the dollar. Lingham did point out that during the same period, the price of Bitcoin increased when expressed in British pounds. The number of weekly inflows into Bitcoin in pounds also hit 200 million pounds when the pound fell sharply versus the dollar on September 26th. So finally, let's ask Gareth again about the future performance of Bitcoin. Will it survive when all other markets will be crashing?
No, I think that at least at this point in Bitcoin's lifespan, you're 100% right. I mean, I hold out hope that as it matures in years, decades, potentially, it does become the digital gold. But it absolutely is a risk-on, risk-off asset right now, and people have to just be honest with it. I mean, so many people kept on saying, oh, it's the safety play for inflation and this, and then we see price collapsing right from 69 down to where it is currently. So eventually it gets low enough where the risk reward starts to make sense for me, but it's just not there. And just like any asset, you don't know the future. No one does. I don't know it. So you still want to diversify and make sure you have a wide array of assets, not just Bitcoin.
So that was all about what Gareth Soloway had to say about the market crash and what he feels about Bitcoin's performance in the short and long-term future, along with discussing what is happening around the market. So what do you guys think of all this? Give this video a thumbs up if you found it helpful, and be sure to subscribe to our channel for more content like this. See you later in the following video. Until then, goodbye.